In this video, I discuss why I'm getting scared about the current state of the crypto markets and what needs to happen to change the momentum of the markets. At the end of this video, I'm going to share you some crucial levels the markets need to hold on to or break through if we want to see some momentum. Everything shared for you on your journey towards financial freedom. Before we're going to continue with this update, we've got some nice few updates from me personally, which is we've got a new office, and that means that this is pretty much one of the final updates that we're doing at my home office. Finally, we're going to be building our own studio, which means that there's going to be a lot more new content coming up on this YouTube channel. Way better content, actually. So comment beneath what you'd like to see. I've been asking about a podcast as well. What kind of guests would you like to see in a podcast alongside me, as we're starting one relatively soon too. Also, as you know, I'm on YouTube and on Twitter, but we recently started our own Telegram channel where you can find more in-depth content on the markets. It is fast moving. We're going to do some more cool giveaways. Everything can be found in the Telegram channel. The link is in the description beneath. Now, when we're looking at the price action of the crypto markets, we can see that the crypto markets are approaching relatively weak months. If we look at historical price action, August and September are usually not the best period in time. While if we are looking at the last quarter of the year, is usually the best period for Bitcoin to perform well in, which means that there's a lot of upside to be gained. But if we're looking at August and September from historical perspective, then it's not the best period to be in. And if we add to that, yesterday, or actually on Thursday, the Coinbase earnings came out, which was very positive. They beat their numbers. But when we're looking at the actual activity from retail, then the retail data shows that currently, compared to 2021, the volumes are still down 75 to 80%. And that raises the question of, are we actually in a bull market at this point? And I think if you ask that to Bitcoiners, then the answer is yes. But if you ask that to altcoiners, then the answer is no, because the Bitcoin dominance continues to rally, which means that we're still not into one. And that is showing through the interest of retail on the data that we get from Coinbase, that it's still down 75 to 80%, while institutional interest has started to run away. When we look at retail, we can also see that the Solana meme coins activity and the Solana addresses have reached a new all-time high. Despite the negativity surrounding Solana at this point, it continues to break levels, and the activity within meme coins has reached a new all-time high. So everything is moving there, and I think that there's going to be a very heavy correlation between Ethereum and in the real altcoins taking off compared to the activity on meme coins. I think that's going to rotate quite fast, and I think that we're on edge for having one. But it shows that retail is still not interested into proper altcoins, and that retail is mostly interested into trading meme coins. It has also been a very big macroeconomic week. FOMC took place. Powell became a little bit more dovish, in which he stated that a rate cut is on the table for September. And that is a good sign, because it shows that we are likely going to get into a period where the global liquidity starts to exceed, but more on that later. Now, what do we see coming out of the FOMC? We see that the 2-year yields have started to fall, and they reached the lowest numbers for months, which is usually a great sign for Bitcoin. As a matter of fact, gold has been seeing a very strong move already, as gold has been starting its upwards run, started to break all-time highs, and it continues to show a lot of strength, while Bitcoin is definitely lagging behind at this point. Now, there's also a question, and this is a great chart, where there is a potential recession coming in when we talk about the inverse yield curve, for instance, that Powell is not expecting a recession to happen, but the data already shows that we are approaching one really soon. And when we are approaching a recession, you can automatically get a case where the liquidity needs to exceed again, which the US almost can't do anymore, but it's going to be increased, through which Bitcoin is likely going to act as gold as a safe haven. And when we're looking at the data, earlier this week we've had PMI data, and PMI is a number from 0 to 100. Above 50 is positive and economic growth, below 50 is economic downfall basically. And that usually signals weakness for the economy. PMI is on the producer side, or the production side, which means that if that is going to slow down, likely we're going to see that in consumer confidence, retail sales, all those data, and also in the labor market. So that point came out at 46.8, triggering the yields to fall even more, triggering the dollar to become slightly weaker, and also triggering gold to continue moving upwards, as we can see in the chart, where gold continues to do well, while Bitcoin continues to do weak. And that is likely due to crypto intrinsic events, or just generally monthly close, FOMC, all those things have been happening, and it's just a summer period where Bitcoin is usually not doing really well. Now, I think that the macroeconomic landscape is going to be changing. We come from a rate hike policy, and we are approaching a rate cut policy, where we are also in an election year, which means that based on the fact that we are in an election year, it is likely going to be well for the economy. It's a strange election year, I need to say that as well, but the chances of having a rate cut is being priced into the market substantially. It is showing a potential of 93.5%, which, if you look at it, the economic data, as I just discussed, is becoming worse and worse and worse. So the markets are already seeing signs of a recession coming in, or at least a policy that cannot continue to do as it has been doing. So from that perspective, it's very likely that we're going to get rate cuts, and rate cuts are super positive for the markets of crypto and for any other asset. If we look at a second argument, we need to dive into Japan and China, where those two countries have been suffering on the altcoin markets as well, or on the stock markets as well. But the global liquidity starts to continue to heat up there. And if we go back into terms of price action over the past few years, we can see that the first half of every year for altcoins have been terrible, where the first half of the year from China, the global liquidity has not been increased. So there's a big correlation happening there, and the global liquidity in China starts to wake up substantially already, which means that there's going to be a likely case of the markets of crypto to follow through. The final thing on this part is that the global liquidity in the US has been going into red. So they have been reducing the Fed balance sheet, but now they start to expand already, and that's not being told. So the expansion is already taking place. There's already more liquidity being added to the markets, and that is only going to continue. And if you go and look at the chart, you can see that adding liquidity is heavily correlated towards altcoins and Bitcoin doing really well. Crypto is also going to change momentum just in line with the macroeconomic landscape. The Bitcoin ETF inflow continues to be positive. And when we talk about the Bitcoin ETF inflow, we've seen that there are multiple positive days going along. And we also know that based from the Bitcoin ETF inflow is that in the first few weeks of the launch, the inflow was negative as people were selling out of the trust. And then it started to wake up. And if that inflow continues to pace up at this point, then it's also very likely that the Ethereum ETF inflow continues to do well as well. And we can see that the Ethereum ETF inflow is not a quarter of Bitcoin compared to the market cap. No, it is very comparable to the inflow of Bitcoin. And as a matter of fact, the inflow in ETH starts to become positive. There are two major signs here, which is the outflow on the Grayscale's trust starts to go down. Where we saw an outflow of 300 to 400 million in the first few days, the outflow is now around 100 million. while the inflow is exceeding that number, which means that there is a constant interest into ETH. And as we also know, the Ethereum ETF or Ethereum blockchain has only been producing or issuing 160 million of new ETH this year, while Bitcoin has been issuing around 8 billion this year, which means that there is a magnitude of interest coming towards ETH, and we are on the edge of having that reversal. Perhaps before we need to have a correction before we can have that run, but the signs are there. And the final one is FTX is going to release 16 billion in USD in Q4 to all the customers, which is new inflow into the markets. Likely this event is going to have the inverse of Mt. Gox and a lot of hype and sentiment going around it. Question is whether clients are actually going to be buying back into crypto, but it's a good thing that's also going to be happening. So when we have discussed that, there are a few things that we need to be looking into when it comes to the markets, which is the levels to look out for. The first thing is the dollar needs to continue showing weakness or strength. So if the dollar continues to have strength, it is very likely that the altcoins will fall. If the dollar continues to show weakness alongside the yields that continue to show the downwards fall, which is very likely, then it's a trigger for the markets to start breaking out for that bull market finally to take place. If we look at the yields, we can see that there is a massive bearish divergence taking place and that we start to rotate as we made a lower high and that the momentum is switching quite fast. There's also a very likely case that simply the US economy is in such a big trouble that people are flying out of the dollar towards Bitcoin and gold for a safe haven. So the crucial levels that Bitcoin needs to hold on to is the level at 60 to 61k. As long as that holds, it's going to be completely fine for the markets and we are likely going to have that bounce back up towards the new all-time highs for the market. Now if we look at Ethereum for instance, then it is crucial that it needs to break above 0.0515 BTC, which has been lost due to the fact that the outflows had such a big impact. Now if that breaks, it is party time. And if the outflows continues to be as it has been, so we had an outflow of around 25% at this point, if there is another cycle of 25% cashing out and the inflow cannot pace up, then it is likely that we retest the low and revert from there. So those are the two boundaries that we need to be looking into for ETH. From the bounce of the lows or the break of 0.0515, it's going to be party time for the altcoins. For ETH against USDT, it's a little bit different. It's currently on a crucial level to be holding on to. And if that continues to hold, it's very likely that we start making that breakout. And I think that, as I discussed earlier in this video with the Ethereum ETF, an all-time high is on the cards for the next few months. It is just very clear that the interest in ETH is high. And I think that's going to continue having a lot of momentum. The question is, how far is Bitcoin going to go down and how much is the outflow on the trust going to take place for ETH? If that is going to be to 60k for Bitcoin, it's likely that ETH goes sub 2800 and revert from there. But those are the triggers that we need to look into. And the correlation is going to be significant between ETH and the remainder of the markets. Yes, the inflow is through the Ethereum ETF, but the inflow in the altcoins is going to be through positive price action of ETH. Thanks for this update. I'll be back next week. Subscribe to this YouTube channel. I'll see you again. Ciao.